It was a Tuesday morning in Ohio, and a 74-year-old retired school aide sat at her kitchen table waiting for a deposit that never showed up. No phone call, no letter, no warning, just an empty space in her bank account where her Social Security payment was supposed to be. She hadn't done anything wrong. She hadn't missed a payment, missed a form, or ignored a warning letter. She had simply missed one small update that millions of seniors across this country are still missing right now in 2026 without even knowing it. And by the time most people find out what went wrong, the money is already gone. Hey, I'm Lana Maines. I'm here to bring you the kind of financial information that can genuinely improve how you're living right now. So hit subscribe and turn on notifications. I break one of these down every single week. Whether you're 62 or 82, retired for decades, or still working part-time, at least one of these three changes applies to you or someone you love. Stay through the third one because that's the one that quietly costs people the most money. Here's why you haven't heard about any of this. These changes weren't announced on the evening news or mailed to your house. They're buried in regulatory language on government websites that assume the public will self-educate. The system doesn't remind you, doesn't warn you, and doesn't wait for you. If you don't act, it moves forward without you. The oldest seniors, the ones who can least afford a missed payment, are disproportionately the ones who won't find out until something has already gone wrong. And two of these three changes apply at every income level. One applies no matter what you earn at all. These aren't programs aimed only at people in financial hardship. That brings us to change number one. The one with the hardest deadline. Change number one is the mandatory transition away from paper checks. Executive Order 14,247, signed in March 2025, directs federal agencies to eliminate paper checks for benefits, with full elimination targeted by the end of 2026. If you're still getting a paper check, that phase-out is happening now, and it does not come with repeated warnings. One missed enrollment step can mean one missed check. Here's the number that makes this urgent. A paper check is roughly 16 times more likely to be lost, stolen, or fraudulently altered than an electronic deposit. That's the documented reason this change exists. Here's what people get wrong. They assume the SSA will call, send a certified letter, or hold the payment until they respond. It doesn't work that way. The system sends one notice, and if it goes to an old address or gets buried in the mail, the deadline still passes, and the payment can simply stop. It also helps to understand why the government is pushing this so hard. A paper check sitting in a mailbox is one of the easiest things for someone to steal and cash. Electronic payments simply don't carry that risk. If you're a lower-income senior, this is the payment covering your rent and your mother. Groceries. Missing it is a crisis, not an inconvenience. If you're comfortable, remember this covers any federal benefit or Medicare reimbursement still arriving by paper too. So don't assume you're already covered just because your main check is electronic. Here's the action. Go to godirect.gov. You'll need your Social Security number, bank account number, and routing number. No bank account? Enroll in the Direct Express debit card at the same site or call 1-800-333-1795. It's FDIC insured, charges no monthly fee, and works like any debit card at the store or ATM. Don't trust putting your information online. That same number connects you to a live representative who can do it by phone. And if you live somewhere with no banking access at all, the Treasury allows a hardship waiver by calling 1-877-874-6347. But that's for rare cases only. Not a way to keep your paper check by preference. Once you've done that one step, you're finished with change number one. Think about whether anyone you know is still on a paper check because that next step is just as urgent. And it's not one they can take for themselves without knowing it exists. That leads to change number two because getting the payment deposited is only half the problem. Whether the amount is correct is the other half. And for millions of people right now, it isn't. Change number two is the benefit recalculation window open right now under the Social Security Fairness Act, signed into law in January 2025. That law eliminated two provisions that had reduced Social Security benefits for public sector workers for decades. The windfall elimination provision and the government pension offset on the books since the early 1980s. Teachers, firefighters, school aides, and government employees were the ones affected. Some watched their checks shrink for 40 years because of a pension earned in a separate job. Those reductions are gone now, and the SSA is recalculating benefits and issuing retroactive payments. But it will not automatically reach everyone who qualifies. The recalculation depends on your earnings record being accurate, and errors or missing employment history can leave you out unless you initiate the review yourself. Here's the mistake that costs people. They assume that if a correction is owed, the SSA will find them. The agency is processing millions of these recalculations, and accounts with incomplete records simply move slower or fall through the gap entirely. If you worked any public sector job, even briefly, the monthly correction can reach several $100s retroactively back to January 2025. If your Social Security was reduced by the government pension offset, a spousal or survivor benefit you were told you didn't qualify for may now be restored. Right now, log in to ssa.gov/myaccount and pull up your earnings record. If any year or employer is missing, that's a discrepancy affecting your benefit. Call 1-800-772-1213. Ask to initiate a Fairness Act recalculation review and get a confirmation number before you hang up. The SSA has no way to notify you that your record is incomplete. That's why you have to look yourself. So here's what I want you to do. The exemptions, the breaks, the refunds most seniors already qualify for but never claim. I've put them all in one place, state by state, form by form, so you don't waste hours digging through government sites. Everything's laid out fast and simple, so any senior can find exactly what applies to them, no matter what state you're in. There's money you're leaving on the table. It's called the Senior Exemption Playbook. It's in the first pinned comment right below this video. Just tap it once and you'll have everything you need. Now, stay right here because the last one is the biggest stack of savings most seniors never claim, and it's the reason I made this whole video. Change number 3 is a stack of several 2025 and 2026 updates that layered together are worth $6,000 a year at minimum, and for some retirees, considerably more. First, the Medicare Savings Program income limits were expanded in 2026. This federal and state program pays your Medicare Part B premium $185 a month, $2,220 a year, plus deductibles and copays for qualifying beneficiaries across several tiers. If you checked eligibility before and were told no, check again because the thresholds moved. Most people never claim this, not because they don't qualify, but because they checked once and never checked again. Second, the credit for the elderly or disabled, Schedule R, is worth up to $1,125 for single filers or $1,688 for a joint filer. Many seniors below the filing threshold assume they don't need to file at all, but you must file to get this credit, even on a return with zero tax owed. Third, most states run a senior property tax freeze or exemption starting around age 65, sometimes lower if you're disabled. It's filed through your county assessor, not the IRS or SSA, and one filing can lock your bill in place at its current amount for as long as you own the home, even while your neighbor's bills keep climbing. Fourth, utility assistance through LIHEAP pays your energy company directly rather than sending you a check, and it needs to be renewed each heating and cooling season. Easy to forget once it's set up, and easy to lose if you don't renew on schedule. And here are the two pieces most seniors have never heard of. The 2025 tax law created a senior bonus deduction, an extra $6,000 per person, $12,000 for a qualifying couple, stacked on top of your standard deduction. No itemizing required. The full amount applies up to $75,000 in income for single filers or $150,000 for couples, phasing out completely at $175,000 and $250,000. Claim it on Form 1040 or 1040SR through tax year 2028, or amend a past return with Form 1040X to collect what you missed. And Medicare Part D now caps your out-of-pocket drug costs at $2,100 for 2026, Once your deductible, co-pays, and co-insurance hit that number, your plan covers 100% of your covered medications for the rest of the year. If your income is limited, extra help through Social Security, Form SSA 1020, can push your premiums and co-pays down even further, and it costs nothing to apply. If you're a lower-income senior, most or all of this stack may apply to you. The Medicare Savings Program alone could eliminate your Part B premium entirely. If you're a comfortable middle-class retiree, don't assume you're over the line without checking the actual 2026 numbers, since both the senior bonus deduction and the Medicare Savings Program expansion moved eligibility upward. None of this is automatic. The system will not send you a letter saying you're now eligible. The burden is entirely on you to check, apply, and file. Here's what to do this week. 5 steps. Step 1. Confirm your payment method at godirect.gov or by calling 1-800-333-1795 and verify your direct deposit or direct express enrollment is actually active, not just assumed. Step 2. Pull your earnings record at ssa.gov/myaccount and review it year by year. If anything is missing, call 1-800-772-1213 and request a Fairness Act recalculation review. Get a confirmation number before you hang up. Step 3. Check your Medicare Savings Program eligibility at medicare.gov or 1-800-MEDICARE using the current 2026 thresholds. Don't rely on what you were told in a prior year. Step 4. Contact your state health insurance assistance program. Search your state plus the word SHIP for free in-person help with enrollment and benefit reviews. This service costs nothing. Step 5. Find a VITA site through irs.gov. If you haven't filed a 2025 return, bring proof of age, proof of income, and your Medicare card, and ask about the Schedule R credit, the senior bonus deduction, the Part D cap, and extra help form SSA 1020 all in one visit. The system was never going to reach you on its own. Most people receiving the same benefit this month will never take these steps. That's the difference between money that arrives and money that quietly disappears. Not eventually, but this year on returns and applications that have real deadlines attached to them. None of this requires a lawyer or an accountant. It requires a phone call, a login, or a short conversation with someone whose entire job is to help you for free. The people who take these 5 steps this month keep money that already belongs to them. The people who wait for a letter that is never coming lose it quietly without ever knowing it was there.